The Nifty's now moved down 30 points.
Markets are down and out. There's about a 55-odd point cut. 10,906 is where we are at. The market's down almost at the day's low. 78 lower on the Nifty, 251 lower on the Sensex.
Interesting day today. It looks bad, but trust me, it's better than what the index is suggesting today at least, and what the market looked like at noon.
The mid-cap screen, though the index is ending negative, 23 points down, I'd actually like to start with the winners because you do have quite a few interesting names.
Asian markets fall as International Monetary Fund trims global growth forecasts for 2019. India follows suit but recovers. Sensex ends near 36,500 while Nifty holds on to 10,900. Metal stocks drag.
Sun Pharma surges after the company takes remedial measures after the whistleblower's complaint. CNBC TV 18 Newsbreak confirmed as Sun Pharma will transfer domestic operations from Aditya Medisales to its arm. Company also denies having given any loans or guarantees to Suraksha Realty.
CRISIL downgrades debentures of IL&FS's SPV Jharkhand Roads to D or default rating. Experts hope court will decide in favor of established norms of ring fencing cash flows. Meanwhile, government will tap the Reserve Bank for relaxing, providing for the bank loans to the SPV.
Asian Paint sees profit taking after posting a good set of third quarter numbers with revenue rising almost 25% year on year. Meanwhile, Havells rises 5% as revenues and profits beat street expectations. TVS too gains over 3% on the back of a healthy third quarter earnings beat.
Prabhat Dairy is all set to sell 98% of its business to French company Lactalis for 1,700 crore rupees. The stock rises on expectation of a special dividend but tanks later on fears that the proceeds may not be entirely shared with shareholders. Those were the top 5 headlines from Dalal Street on a day when the bulls seemed to be reined in, but they came back a large part of the way. Hello and welcome to Markets Today Talkback, the show where we tell you everything that happened on those 6 hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. So, I mean, finally the close wasn't as bad as one thought at one point it could be. The market breadth was also, I mean, in favor of declines, but it got a lot better by 3:30. Over the next 30 minutes, we will talk about what happened in today's trading session. Our guests will take your questions, answer them, and we have today Sanjeev Bhasin of IIFL and Mitesh Thakkar on the charts. Sanjeev and Mitesh, thanks very much for being with us here on the show. Take a look at what really happened in the markets before we get to the Q&A session, and let's start right at the beginning. Lata.
Okay, well, it's difficult to say whether it's a good day or a bad day for the bulls, actually. Well, let me start at the beginning. We didn't start with good cues. Asia was down, and that's because of yesterday's Chinese numbers, and then the IMF coming in and saying that there is a global slowdown, and we actually had to follow suit. Well, domestic news has been bad in the sense of the fiscal overhang, but there was this additional problem of, the IL&FS SPVs, its myriad babies now beginning to default because of the NCLAT's order. So that added to the concerns. By end of day, you may say that the market recovered from the day's lows. But it's 1/3% knocked off for the Sensex and the Nifty. And the mid-caps, while at an index level, are down only 1%. Look at the advanced declines. It is still 2.5 stocks in the red for 1 in the green. So yes, there is a minor triumph there for the bulls, but not a whole lot.
Absolutely, Lata. Let's just start straight away as far as sectors and stocks are concerned, and take note of the market bottom up. So weakness in metals, in autos, in public sector banks, and they're on your screen. Metals, of course, by far the biggest area where you saw losses. Where did stocks see losses? There was Vedanta. There was Tata Steel, there was JSW Steel. A lot of metals on your screen. M&M and Maruti from the auto pack were the big losers, and there was a Z which continues to go lower, even though third quarter numbers early last week were actually better than expected. There was strength in Sun Pharma. Actually, the Pharma index was one of the few indices, sectoral indices, which was up in the green. Wipro was higher, and there was Titan, which was up about 2% plus as well. Okay, now we get to the real deal, the broader market. And here, Let's start with losers, since advanced decline was skewed in favor of declines. Prabhat Dairy, 15% lower and some 30-35% off the highs. JSPL was down 4.5%. Blue Dart was down about 4.5%. Bandhan Bank lost 4%. Vivimed recovered and still was down 7% by close. And there was Deepak Fertilizers down about 6.25% or so. The big gainers now on your screen: TVS Motor, 3%. Havells, 5%. Mindtree, and all of the Mindtree gains came in the second half, especially in the last 1.5 hours of trade. Indigo was up about 5.5%. Ahead of numbers, NIIT Tech, Strides. There was Philips Carbon. Info Edge continues its run. Fabulous month so far. Fabulous start of the year, actually. And there was Future Retail, which was up about 4.25% as well. Lata.
Yes, thanks for that detailed description of the stocks that we should take note of today. Some of them we will flesh out in course of time. But first, let's get the macros right. Invite our guests for some views. Mitesh, to you. 10,900 still respected, but the resistance also respected. The territory is getting narrower and narrower. What's the next trade?
I think you've hit the nail on the head. I think the territory is getting narrower. It was a 150-point range to begin with. It's kind of come down to about 110 points. And the way the indicators are turned flat, typically they don't stay this without any kind of slope for a period of 2 to 3 days. So I think eventually we are close to a breakout or a breakdown. Maybe as we approach the expiry, we might get some directional bias. But for the timing, 10,850, 10,975 are the levels to watch out for. A breakout on either side should give you about 120, 125 kind of a move.
Oh, okay. That should take us to the second headline. That's on Sun Pharma. Sorry.
The Sun stock surged in trade, and this follows our story yesterday that the company was going to take remedial measures, and the company has taken remedial measures now following whistleblowers' complaint. Sun Pharma will be transferring the domestic operations, the domestic distribution operations from Aditya Medisales to its wholly owned arm. The company also denied having given any loans or guarantees to Suraksha Realty, which was a big concern. However, experts say that investors' faith is still not restored. Ekta Batra, who broke that story yesterday, is with us with all of the details. Ekta, over to you.
Well, yes, Sun Pharmaceuticals was a stock which was higher in today's trading session. This was on the back of clarifications which in fact came in from the management earlier in the day. They did clarify on 4 points. So firstly, it was on Aditya Medisales, the domestic distribution arm of the company, which is promoter owned, will now be shifted in terms of the domestic distribution business into a wholly owned subsidiary of Sun Pharma. Secondly, the loans and advances which were given to Atlas Global Trading will be settled. Remember, these loans and advances were to the tune of around 2,238 odd crores. The company also confirmed affirmatively that neither any loans nor guarantees have been given to Suraksha Realty, as well as they've initiated steps to induct a new auditor when it comes to its subsidiaries. So overall, these were the changes that the company did announce. It was taken positively as the company has proactively listened to the feedback that they have received from investors and made the necessary changes. Secondly, however, there are some amount of questions which remain. For example, the street would like to know whether there will be any sort of consideration which will be paid to Aditya Medisales with the transfer of the domestic distribution business, as well as more details are possibly required on Atlas Global Trading and any more such transactions that probably exist with the company.
Okay, that's the story. And now for the opinion. Well, actually, somebody else also has that question. So before I ask my question to Sanjeev, let me read out the question. Shlok Sahani has tweeted to us with the question on Sun Pharma, says he has been holding 200 shares of the company purchased at 596 rupees a piece. He wants to know if he should hold or sell. Well, Sanjeev, I would have had a similar question. I don't own the shares because I can't. But really, is all the bad news now in? Is the company on the mend? And therefore, is it a buy time?
Yeah, hi. So Lata, we thought 475 was the bottom when last quarter the results were quite disastrous because of the one-off provisioning. And this quarter again there have been a lot of skeletons which have come out from the cupboard. So we don't know if that's the end of that or there is going to be some more, because there cannot be smoke without fire. So I don't know if 375 is going to be the bottom. there could be some more murkiness. On the fundamentals count, I think generic pricing and local business should see an uptick. Results will be much better than last quarter, but it's a glass half full, half empty. I would still think if you get a rally, try and reduce weightage here, get into better names like Lupin, Dr. Reddy or an Aurobindo, which is one of our topics.
Okay. Point taken. You know, in my time, I have seen some smoke without fire. I have seen rumors that have no head or hands or legs. So anyway, that apart, I take your point that skeletons could still tumble and therefore, you know, you would rather go to Aurobindo.
Absolutely. I mean, but let's just get a quick word in from Mitesh as well. Mitesh, Sun Pharma?
See, Prashant, to be very honest, I think, you know, the way it fell, I think it's tried to bounce back, and this is nearly happening as a vertical movement in at least the last 5-7 sessions. So difficult to say, but typically these kind of choppiness, if they evolve as consolidation, should be bottoming formation process going on. So maybe I think the lows which are tested, I think could be the lows. I'm still not sure. Maybe with time we'll get the answer. But typically, I think, you know, 80% of the times we'll find that this kind of choppiness at lower levels after a big decline lead to some kind of a base formation. So I think accumulation would be a good idea over here, slowly accumulated. Once we start getting past 460, 465 zone, and the recent high was 455, I think that 455, 470 zone, then you will have a confirmation of a reversal on the upside. Till then, it could be a choppy range of 450 to about 360, 370 on the downside.
Okay. I would think everyone deserves a second chance, but yeah.
Okay, third headline, third story today. Rating agency CRISIL has downgraded the rating of the debentures issued by Jharkhand Road Projects implementation company to D or default rating. This has increased the anxiety of bankers and mutual funds who've lent to that particular company. Banks are reported to have approximately 30,000 crore rupees exposure to the various SPVs, and there are hundreds of them of the IL&FS group, while mutual funds have more than 3,000 crore rupees exposure to IL&FS group SPVs. You know, the view from experts says that courts will finally decide, or rather should finally decide in favor of established norms of ring fencing and escrowing cash flows of some of these SPVs. It's a big issue, Lata, and it's got implications beyond just this particular incident or event to, I mean, broadly how infrastructure is funded, etc.
Absolutely. And, you know, in IL&FS case, as in many cases, you know, the debt of the government of India could be huge. The debt of NHAI could be huge. But why does a bank lend to a particular highway or a railway project or a road project? Because you're told that all the monies of that company will be put in an escrow account and your interest will be serviced first, and only then other dividends, etc., will be paid. So it is in that faith that ring fencing works and escrow works that the SPVs were lent to. Now the, you know, people who read the NCLAT order suddenly realize that, oh, the NCLAT order has said all the subsidiaries of IL&FS will be a part of the restructuring package, and therefore the management of this particular SPV, Jharkhand Road Projects Implementation Company Limited, changed its stance of continuing to keep the money ring-fenced and wrote to its trustee, IDBI trustee, and said, don't release any more dividends. And that has set the cat among the pigeons. First, CRISIL downgraded it to B, from AA to BB. And then yesterday, when the dividend date passed and the dividend didn't come, it has downgraded all the way to D, or default. Now, this is extremely difficult for a mutual fund manager because some people come and take away the money. At that time, you have to, you know, value the existing bonds at a particular price. Now, you don't know how to value them because it's D now, but somebody will take the NCLAT order to court, to the apex court, Supreme Court, and the Supreme Court may well say, no, this SPV has to be respected. It may well say that all the money cannot be taken away. This debenture will be paid back later. So how do you value it? Is a genuine problem, and it could even set a bit of panic among investors. For the banks, the government has come to the fore and said that 30,000 crore of exposure, they're going to write to the government. This again is a TIMSI exclusive. Our colleague TIMSI broke the story that the Department of Financial Services will write to RBI and say, give them more time to provide, or don't ask them to provide now because the money is there. It will just have to be legally allowed to be paid. Now, you know, you may get some munificence for banks, but mutual fund guys are genuinely, you know, at the receiving end of market forces. This is an unhappy problem, and an end is not in sight. People say in 3-4 months things will be resolved, but let it get resolved. Until then, the uncertainty is killing.
Absolutely. Sanjeev, I mean, how would you sort of look at this entire episode? The hope is that this will get resolved in favor of established norms, but we don't know that for sure right now.
Yeah, so Prashant, we'll have to take it as the news flows, and maybe CRISIL has reacted fast enough to downgrade it. They didn't want to be left when all the water has flown under the river, as you saw last time. So I think a lot of water has flown under the bridge. I think the government stands by it. They know that the assets are there. It's how fast they can implement that. And like Lata said, I think 3-4 months for a resolution will be on the cards. I was seeing on the TV, banks have been told not to make any provisions for that. So it should be status quo. It will add to the problem, but we know major part of the problem is all behind us. How fast we can get it resolved will be the key. So stay away from stocks which have anything to do with IL&FS, and stay with the ones which are actually outperforming, the likes of Reliance or the IT stocks which are not privy to any of this.
Okay. Well, I like your confidence that things will get resolved in a few months. That's what I hoped from the IBC for the first 12 cases, and barely a handful have gotten resolved. But yeah, let's hope this time around things could be different. And by the way, banks are only requesting that they should not be allowed, should be given a forbearance. But we don't know if RBI will give that forbearance.
We're through with 3 of the top 5 stories of the day. Let's move on to the 4th one. Earnings in focus today. Havells reported its third quarter numbers, which were no different than the last quarter. The stock ended 5% in the green. Revenue beat street expectations, and so did profits. But margins were weak, coming in below expectations across categories. The commentary from the management, though, is what really led to the stock going up the way it did. Anisha is here with the breakdown. Anisha.
Well, it was a mixed quarter for Havells. While the top-line growth really continues in the strong momentum, it is the margins that were weak. Now, to tell you the top line, that came in at 2,500 crores versus our expectation of 2,200 crores, and that was across categories. So, look at the consumer durable space that has shown the 30% plus growth for the third straight quarter, and other segments like cables, switchgear, Lloyd, lighting all have reported over a 20% growth. But this growth actually came in at the cost of the margins, because the consolidated margin actually came in at 11.7% versus the already bleaked or the already muted expectation of around 12.8%. In fact, in the durables business, the segment margin eroded by 400 basis points on a year-on-year basis, and other businesses like cable and Lloyd also saw margin erosion of over 100 basis points. However, why did the stock react? First up, the street is giving them a thumbs up about the strong top-line growth that has continued for 3-4 quarters now. And secondly, the management commentary regarding the Q4 margins is good. So they say that the durables business margins should improve in Q4 to come back to the normal level of the year. And the margins will improve in the coming quarter because the price increase that they will take and the commodity cost pressures have really receded. So these two statements actually made the stock go up 7% off the day's low and ended around 6% higher. Back to you.
Okay. Thanks for that, Anisha. Thanks for that very positive interpretation. Asian Paints was also an all-round beat, but the stock ended in the red. That was perhaps due to mild profit taking. For the numbers, net profit came in close to 650 crore rupees for the quarter. Revenue grew almost 25% year-on-year. Mangalam is here with all the details. Mangalam.
Well, Asian Paints in the third quarter reported an all-round beat as far as the performance is concerned. The first thing, domestic volume growth, appears as if the volume growth has been around 20 to 22%, and this is much higher than our expectations of 14 to 15%. With that and some price realization, the company posted a revenue growth of 24%, highest in the last many quarters, at least 16 quarters if one must. EBITDA also higher by about 17%, 1,043 crores was much above our expectations of 985 crores as well, and the company posted a net profit growth of 14%. The stock was slightly lower, perhaps on account of the fact that it has rallied quite a bit from October, but triggers for the fourth quarter will be, one, their ramp up and utilization of the Mysuru plant. Secondly, the company's price hike in December would reflect in the fourth quarter, and the benefits of lower crude prices will fully be realized in the fourth quarter as well, because the third quarter had an element of high cost input inventory which they had. Add to that, the stock trades at 50 times FY20 earnings, so not particularly cheap. However, with this kind of performance, it will be very interesting to see what the brokerages have to say.
Okay, TVS was the other one which gained over 3% on the back of a healthy third quarter. The motorcycle company beat street expectations with net profits up by over 15% at 178 crore rupees as compared to last year. Sonia is here with more. Sonia.
Well, thanks for that. It was a good set of numbers from TVS Motor, a beat on all fronts. The revenues went up 26%, much ahead of estimates, on the back of a 20% plus volume growth that the company clocked in. Of course, this was because of very good export sales that the company recorded on the back of a low base, but also the premium motorcycle sales have gone up, on the back of which their margins were much better than estimated. Second consecutive quarter of 8% plus margins is what the company clocked in, and the management said that Q4 will be better than Q3. Not just that, TVS Motor will outperform the industry in Q4. So those positive statements took the stock higher in trade today.
All right, thanks a lot for that, Sonia. So actually, all three numbers were good. Some of it was in the price, like in the case of Asian Paints, because we had KBS Anand a couple of weeks back clearly saying that they had a very good festive season. So probably all priced in. Nevertheless, questions. Shyam K. Chattakond, I think, has written to us with a question on TVS Motors, wants to know if it's worth switching to this motorcycle company. He has shares of Future Retail. So can he switch from Future Retail to TVS Motors? We don't know what price he bought or whether he's in the money in Future Retail. But how would you look at the two stocks, Sanjeev?
Yeah, so I think TVS Motor numbers were much ahead of the street. And the guidance seemed very positive. So there's been a lot of pessimism on two-wheeler and four-wheelers because of the GST and a whole host of other factors on insurance and so on. And TVS has pleasantly surprised on the positive side. I would definitely say look for a decline and try and shift into TVS. This is an expensive stock in the two-wheeler, but I think two-wheelers are going to have a very good time in the coming quarter. And then, once the elections are over, you'll see more impetus on rural spending and so on. So I think a target of 650 on TVS may be on the cards in 2019.
Okay, so go for TVS. But very quickly, which is the better chart, Mitesh? Future Retail or TVS?
See, it's difficult to compare, but yes, TVS has a decent chart in the sense that, it's been consolidating now for many months and typically it could break on the upside. If you look at the history, I think, right from July 18, the stock is doing a range of about 500, 520 on the downside to about 600 on the upside. So there's a good consolidation which is going on. I think eventually it will break on the upside because with consolidation, the indicators have cooled off and now can be possibly looking at the upside. So it could go to about 700 kind of zones if you give it about 8-9 months. So in that sense, TVS is a better chart.
Okay, well, the fifth and the last story today, Prabhat Dairy will sell its dairy business to a French company, Lactalis, for 1,700 crore rupees. Remember, the dairy business constitutes 98% of the company's revenue. The stock initially rose sharply on news of the sale as shareholders expected big dividends, essentially that cash to be paid out. But the stock slumped later on fears that the promoters may not share the proceeds with common shareholders. Mangalam is here with more details. Pretty dramatic day for Prabhat. Mangalam.
Prabhat Dairy saw a volatile day in today's trading session, opened about 20% higher and thereafter corrected about 30% from highs. Why did that happen? One, because the company announced its sale of dairy business to a French company, Lactalis, for about 1,700 crore rupees. This dairy business constitutes about 98.5% of the company's total revenue. And the company's EV or enterprise value is around 1,200 crores. And the management said that they will share a substantial portion of the proceeds with the shareholders. However, the street did not like the fact that there was no open offer and the company chose this route to sell almost entire of its business. Remember, the 1.5% of the remaining business has the cattle feed business, for which the company has also entered into a joint venture with a Danish company earlier this month. It will be very important to see how much money is eventually given out to the shareholders.
I take your point, Mangalam. There will always be a fear that they will keep a lion's share and pretend that they are using it for the animal feed business. So that fear is taken. No time for questions, actually. So Sanjeev and Mitesh, thank you very much for being with us today.
Well, it's a wrap here on this edition of Markets Today Talkback. From Latami, everyone on the team, thank you very much for watching. More coming up on the other side.